Hello, hello, everyone. This is Danya Zimmerman, the powerful biz woman. Thank you so much for tuning into our first, the Ultimate Business Conversation YouTube show of the year. This is 2022. I'm hoping that my guest, my accountant Deltrease Anderson, will appear with us, but the show must go on. So I'm going to start the show. And today we're going to talk about how to keep the IRS out of your business pocketbooks, wallets, and bank account. And I'm just so excited to have our guest on here. Hopefully, she'll be able to join us. So I'm gonna try to send an invite to her again. If she doesn't join us, don't worry about it. We're going to do the show and keep it moving. So just give me a moment. I'm gonna try to send her an email again to make sure that she is able to show, because sometimes things happen and it's beyond our control. So I'm gonna go ahead, and I just sent her the link again, and hopefully she can join us in a little bit. But if not, we'll keep the show going. And I am just so excited to be here. It's 2022. We had taken a sabbatical from broadcasting the Ultimate Biz Conversation because we had to revamp everything when it comes to our brand and our business. And I think that's one thing you realize as a business owner, that there are going to be times where you have to take a step back from your business and figure out what is best for your business. So I'm just excited to be here. And if Deltrease is not able to show, is not able to appear, we're going to keep it moving. Today, what I'm going to do is, since it's close to tax season, I wanted to focus on giving tips on, on how to handle the IRS when you're a business owner. And first of all, I want to let you know that I'm just providing information. This is for informational purposes only. I always recommend that you always talk to a professional when it comes to your taxes, especially if you're a business owner. You want to make sure that you have a tax professional on your business dream team. You want to make sure that they are an accountant, or an enrolled agent with the IRS, not just a tax preparer. You want a professional. You want either a financial professional, enrolled IRS agent, a public accountant who is certified, and also another person that works well with you when it comes to your business finances is a bookkeeper. And the reason why you would want a bookkeeper is because that bookkeeper and your tax professional can work together to make sure that your business finances are in order. Because when you are running your business, you want to make sure that your business finances are in order. You want to have a clear understanding of what are your profit and losses. You want to have a clear understanding what is gross income, what is net income. You want to have a clear understanding of how much money you are spending in your business and how much money you are earning in your business. That's why it's important to have a tax professional, like an enrolled agent, an IRS enrolled agent, a public accountant, a bookkeeper. And when you're in business, it's not, to me, statistically, you may not want to have a tax preparer, because you want to be very careful to make sure that you have someone on your team who can help you with your business finances, who can help you with your taxes. And one reason why you would like a IRS enrolled agent is, if something happens, if the IRS decides to audit you, they can represent you when it comes to dealing with the IRS. They're like the lawyer when it comes to the IRS. Like you wouldn't go to court without a lawyer. So you should not go and deal with the IRS without a public accountant or an IRS enrolled agent, because they will make sure to represent you. They know the ins and outs of dealing with the Internal Revenue Service. trying to go and deal with the IRS on your own, I don't think that's advisable, especially if you are a business owner. That's why I always say that it's important for you to educate yourself. And like I said, this is for informational purposes only. You take notes, you go to that tax professional, and you ask them the necessary questions needed to ensure that you are doing your taxes correctly. And you have to be very careful because a lot of people have gotten in trouble in the past couple of years, um, for applying for like PP loans illegally, applying for certain loans and grants that the federal government and state and local government were offering to businesses who were in trouble because of the pandemic. And they would go, a lot of business owners would go out there, someone would say, oh, I can help you get a PP loan, and instead of go to a tax professional and an attorney to see if they qualify for the PP loan, they would go to these individuals, get these PP loans, knowing that they didn't have a business, knowing that their business did not meet the guidelines and requirements for such loans, and they wind up getting in trouble. That's why I always say it's very important to have a tax professional with you. And I think Deltrease is trying to get in. I'm trying to add her, but it says her device is not connected. So, Deltrease, you may want to try to get back in. But our accountant our IRS enrolled agent is trying to get on. And if you have any questions, why don't you just join us to ask questions while Deltrease is trying to connect? So let me see what I can do. I may have to I'll try to see if she can rejoin. So I'm going to hopefully she can rejoin us. So I'm going to send her the invite link again. Sorry about this. You know it's going to be technical difficulties, but I'm just so excited to be back here with you. I'm going to send her the link again. And maybe she can get on this time, because she is very knowledgeable. I love her. She has helped me for the past, I think she's been my tax professional um, for the past 7 years now. And she's always come on to my shows to give, wonderful advice about, taxes, about business finances. So what I'm going to do is I'm going to try to kick her out and see if she can join again. And Deltrease is very knowledgeable. That's why I say you got to build that business dream team. And you have to have that business dream team ready. And you can't just be saying I can do everything on my own. As entrepreneurs, we are always trying to do everything on our own, knowing that we can't do it. And I'm one person that will let you know I am not good with money. I'm not good at math. I do my best. I do what I can, but I make sure that every year, every chance I get, I meet with Deltrease when it comes to my business finances, when it comes to my taxes. And since I've had her doing my taxes for me, I haven't had any trouble with, the IRS or anything. And that's why I say it's very important for you to have that person. It's very important for you to have that business dream team, especially on the financial end. You want to make sure you have that bookkeeper. You want to make sure you have that that IRS enrolled agent, or that accountant, and make sure that your accountant and bookkeeper can work together to keep your finances in order. And I want to give you some tips when you are meeting with your tax professional. One thing I always tell people: make sure you have all of your business information together. Do not, I repeat, do not go to your tax professional with all of your business receipts, your business expense forms in a shoebox. Because that's like a joke among business owners. They'll put all their receipts and everything in the shoebox. And then your accountant or your tax professional has to take time and hours trying to sort out all of this, and they will charge you for that time. So when you are meeting with your tax professional, make sure that you have everything together. Make sure that everything is together. Put it on a spreadsheet. QuickBooks is amazing to have, because you can give your tax professional access to your QuickBooks, and they can easily go to your QuickBooks and get your information that they need. So that's one important thing that you need to do, is to make sure that you have everything together for your tax professional. Make sure that you make sure that they can have access to everything you have, so it won't be difficult for them to get your information. It'll be easy for them to access it. It'll be easy for them to fill out your tax forms and everything, and it'll be right there ready. So that's number one. Do not go to your tax professional with all of your receipts for your business in the shoebox. Number two, make sure you have pen and paper ready to ask those necessary questions that you want to ask them when it comes to your business finances, when it comes to your money, so you'll have a clear understanding of what is going on. Don't just give your financial information to this tax professional and not ask them questions. You want to make sure that they're doing everything they can for your business so that your finances will be good. And then number three, do your due diligence when it comes to getting your information to your tax professional. Make sure that you give them all of your receipts. Anything that you spent in your business, give it to them. Give them that receipt. Ask about deductions, because sometimes we will talk to friends and they'll say, oh, you can't deduct this or you can deduct this. The only people that can really give you that information about deductions is your tax professional. They know it. They know that IRS code from back to front. They know when changes are being made in the IRS. They know, when new laws come up with the IRS. They know when the IRS changes laws, when the IRS changes deadlines. So you want to make sure that you do your due diligence and ask your tax professional those questions when it comes to your taxes. Number four, don't hide anything from your tax professional. Let your tax professional know what is going on when it comes to your business finances. Let your tax professional know if you have any issues or concerns when it comes to your business finances, because they are there to help you. They are there to make sure that your finances are good. They are there to make sure that you stay in business. Make sure that you make money in your business, and make sure that you don't lose money in your business. So that's another thing that you want to make sure, is to make sure that your tax professional knows everything, because they cannot read your mind. You have to tell them what is going on in your business. You have to tell them any issues or concerns that you have when it comes to your business. And don't be afraid to ask questions when it comes to your business. Just don't be afraid to ask questions. And number five, stay in contact with your tax professional. Call them when you have questions. Call them and let them know what your issues and concerns are. Do not be afraid to ask them questions, because a lot of times we'll sit up there and just give out receipts, give them everything, and we don't ask them questions. And then when we get our tax return, we notice that they missed a lot of information. So that's why it's very important for you to do your due diligence, do your homework, to make your tax professional job easy. When it comes to your business finances, you want them on your team, but you want to make sure that their job can be done easily. And the only way you can make sure that you and your tax professional's job is easy when it comes to your business finances is you need to be organized with your business finances. You need to have a program in place like QuickBooks, where you can easily put your receipts in, where you can easily put your receivables in, you can easily put your expenses in. You can put data in on anything you spend when it comes to your business, like your daily expenses, like if you travel for your business, if you buy products for your business, if you, depending on whatever you do for your business, you want to make sure you are organized and have a good financial system in place. Because when you have a good financial system in place, if something happens to you, your business can keep moving forward without you. That's why it's very important to have financial systems in place. And that's why it's very important to have a professional tax professional on your business dream team, because they can help you make sure that you create the best financial systems for your business. And also, when you are organized and you have all that you need in place, and it seems like she's blocked, and I don't know why she's blocked. So let me try one more time. I'm gonna see if she can come in. I'm gonna copy this and see if she can come in. Sometimes StreamYard can be very, very difficult, and I apologize about this. I don't know what is going on. Um, and I don't know why she's being blocked, because usually we can get on and it's no problem. And I see that I didn't. So let me see if she can come back on again, because I don't know why it's blocking her. But like I said, when you're organized, your tax professional job is a lot easy. When you're organized, your taxes are done and you don't have any problems. You know, hopefully, if you're organized, you get that refund. When you're organized, the IRS doesn't bother you. You know, and even if they do bother you, you're so organized that you have your stuff in place. Whereas if the IRS decides to audit you, your tax professional can answer that audit like that when you're organized with your business finances. So you must be organized and don't be afraid. And another thing is, when you have clear communication with your tax professional, that's another thing. Do not hide anything from your tax professional. I repeat, do not hide anything from your tax professional. If you have been sued, let them know about that. If you have made a large purchase, let them know about that. Let them know about every expense, every money that comes in. Make sure you claim whatever you make in your business, and make sure you let your tax professional know. And another thing is, you know, you want to make sure that you have a clear understanding of your business finances as well. That's why it's very important to ask your tax professional those necessary questions. Don't be afraid to ask them any questions. And hopefully we can have Deltrease come on another day. And I apologize, but I don't know what's going on with StreamYard. Sometimes it works, sometimes it doesn't. But she's been on my show so many times that a lot of things that I'm telling you, she will let you know. But I really wanted her to talk about the new laws that the IRS was going to have, like, you know, with when it comes to them telling you to file your taxes early. Because one thing I know is that with the IRS, they don't have that many employees working. So when you do file your taxes, you won't get the normal turnaround that you get. You're going to have a little waiting period. Also, there's a new law with the IRS where you have to provide them with your driver's license. And I'm not sure with the fingerprinting when you file for taxes. And I will double check with Deltrease with that. But that's one of the new laws where you have to provide. Okay, here we go. All right.
Lord have mercy.
Thank you, girl.
Hey, Miss
You
Danya.
saw me talking. I was keep going because I knew you were going to come on.
You
I
did
was
a
just
good
giving
job.
them general information.
You did an excellent job for when I could hear you. You were doing well.
Yeah. Yeah, I don't know, you know, StreamYard, but Deltrease, one thing I want you to talk to the people about is that new law with the driver's license and your fingerprint.
So you mean as far as when identifying
When
yourself with the
yeah,
IRS?
when you're filing.
Okay, so yeah, so that is not a law yet, but the
Oh,
IRS
okay.
is looking into, um and it probably will be, because that's just the way of the world right now. But in order for you to access your online profile, you may have to actually do some sort of either facial recognition or fingerprint at some point. I hope it doesn't get to that, but it seems like that's the way it's going at this point.
I think it's going that way because especially like with the unemployment, they how people from other countries like Russia were stealing people's identity because that
Mhm.
happened to my dad, and
Oh,
I think that's why they're doing that because I was reading on a CNN report they had a high influx of people filing their income taxes, and
mhm.
then they had they filed their income taxes, but then the IRS sent them a notice saying you have already filed, we sent
Right.
your refund out. So
Yes.
I think that the ID is a good thing, but I don't know about the fingerprinting because I'm like, how is that going to work? I mean, I guess they'll create a certain app where they'll send a link to you and you can put your fingerprint or something like that on there.
Yeah, so here's the thing. When as professionals, depending on the level of um licenses or designations you have with the IRS, you have to get fingerprinted. So a long, long time ago, when I started in this tax game, I actually had to go to wherever, I think it was SLED, to get
Uh-huh.
fingerprinted and send in that those my fingerprints to the IRS. So maybe they're going to start doing that again, or they may just have some sort of electronic way that they can get it done. I just hate to have my fingerprints all over everywhere. But at the time when I needed to get my fingerprints for the IRS, I had to go to SLED and get a card and get fingerprinted. So
Uh-huh.
we'll see what this new way is going to be.
Okay, so that's pretty interesting. Now a lot of people have been talking about the new deductions that they want to put in there. Can you tell us about some of the deductions or some deductions that were removed?
So I was just about to say there isn't really any new deductions per se.
Okay.
The IRS, well, because of COVID, there are certain deductions that someone or a business may qualify for. And I say that lightly because there have been a lot of people that have been getting in trouble, tax trouble, because they are taking deductions that they are not supposed to take. Okay. So there are certain deductions for COVID, depending on your business structure, depending on if you actually had an occurrence to take that deduction, you can get certain COVID deductions. If you had employees, and I think we talked about PPP last year, but if you have employees, and if you qualified, if those employees, some or all those employees were affected by COVID, then there may be some deductions that you can take because of that. If your
Okay.
employees, they had death in their family and you decided to pay for a funeral or pay for a portion of that, grievance, if you will, or bereavement, then there may be deductions for you, but it's not for everybody. And you have to be in the right business structure. You have to be in business, number one. Um,
Mm-hmm.
and it has to be documented. So that's where people are
Okay.
falling down, because they're believing like everything. Some I've seen instances where people just started businesses just to say, "Oh, let me get an LLC." Okay, well, what are you doing? Oh, well, I just got my LLC so that I can write stuff off. What are you writing off? Do you have income? What do you have a profit motive? You can't just start an LLC. I've seen things in these I call it out in these social media streets where people are setting up these
Oh,
LLCs, putting the LLC in the kids' names, and for nothing. And so now, and some of them, they might get a federal ID, they might not. And if they get the federal ID, now the IRS is looking for a tax return. What are you doing? There's because people want to write off stuff. You can't write off stuff unless you are legitimately entitled to write that stuff off. And I say stuff because I can't say anything else because this is probably a kid friendly show.
yeah. No, I understand because I was reading that it was an actress that played in a Tyler Perry show or movie. She um this guy tricked her into, I'm not gonna say, he convinced her to let him help her get a PP loan. And a lot of people didn't even have businesses, and now they're being indicted by, the federal government. And I try to tell people they will catch up with you. And I feel kind of nervous. That's why I always tell people, if you get these coaches out here who say, "Oh, I can help you get a PP loan or this loan or money for your business," I say, yeah, talk to them, but then talk to your tax professional too, to make sure you can do it, to make sure it makes sense. And I think a lot of people fail to realize that the best people to talk to when it comes to getting money for your business, one is a lawyer, and two is you, tax professionals. These two know what the lawyer knows, what the laws are, and the tax professional knows what the financial laws are, as I can say, the IRS laws. They can
Mhm.
tell you what is good and what is not good. And also, like for me, even though I help people set up their business, I will refer them to you and to a lawyer to figure out which business entity is right for them when it comes to, their finances and from a legal standpoint, because a lot of people are starting these LLCs, but they don't understand the rules when it comes to from a financial standpoint. Can you explain to them? Because a lot of people think that once you get an LLC, you are just protected, and that's not the case. It's really not the case. You
No,
have to figure out which business entity is right for you. And can you give us a little understanding from the financial side when it comes to the business entities, and why not that may not be the best fit for your business?
absolutely. And certainly this is not from a legal perspective. I know you're going to be way better suited to talk from a legal perspective because an LLC is nothing but that covering for legal protection. You can be an LLC and it has nothing to do with what your actual tax liability will end up being. So you can be a single member LLC. You're going to be taxed just like a sole proprietor. Okay. So that's just not just, but that's the gig worker, that's the contractor, that 1099, the person that received the 1099, or who maybe they didn't receive a 1099, but they never did incorporate their business. They never made their business an S corporation or a C corporation. Okay. So from an LLC or a single member LLC or sole proprietor, that person, not the sole proprietor, but when that person puts that LLC protection around it, that has nothing to do with taxes. They're just legally protected. If someone had a LLC and they have a pop-up shop and someone
Mm-hmm.
slips and falls in the pop-up shop, because they have the LLC, that's their legal protection.
Okay.
So if someone is that single member LLC pop-up shop and they made $200,000 last year, it doesn't matter that they're LLC. Now we're talking what's your taxes going to look like. Okay.
Mm-hmm.
Now, just because one person made $200,000 in their LLC, and maybe there was another person that made $200,000 and they're a sole proprietor, guess what?
Mm-hmm.
If their expenses are the same, their taxes are going to look the same. But now that's
Okay.
almost never the case. Okay. Because I can make 200,000, you can make 200,000.
Uh-huh.
And how we craft our money, how we spend our money, how we invest our money, the different places where we put our money, we may still end up with a different tax outcome come the end of the
Okay.
year. Okay? Even though we're both LLCs or sole proprietors or whatever you want to call it. So now, single member LLCs and sole proprietors, they're going to get taxed the same way. They're going to get federally income taxed. They're going to get state income tax. They're also going to get self-employment taxed. Okay. And I say they're going to get state income tax if they're in a state where they have state taxes. Okay. Now, there could be other taxes. If I made my 200,000, but I made it in the service, like I made it as a consultant or an accountant, you
Uh-huh.
made yours as a consultant, but you could sell books, you could sell paraphernalia. Now you have an extra tax. You have a sales tax. So we're still going to have a different taxable outcome. Okay.
Okay.
I'm going to push the sole proprietors, single member LLCs aside. They are going to, if you make a profit, you're going to have a federal income tax. If you're in a state that has a state income tax, you're going to be state income taxed. And then you're also, if you have a profit, you're going to be self-employment taxed. Okay. At least those three. There could be other taxes depending on your industry.
Oh, okay. So you'll
Now,
receive a state tax, federal tax, and what was it, the third one?
self-employment,
Okay.
self-employment tax. And the reason is just by law that you get that self-employment tax. If you worked for someone else and that person gave you a W and that employer gave you a W-2, then
Okay.
you would have in your W-2. So while you're working, 7.65% of your wages and salaries would actually be deducted automatically from your paycheck before you saw a dime, right? That's FICA.
Wow.
And on the flip side of that, 7.65% of your salary is paid to the well, to Social Security Administration by your employer. Okay. So you pay 7.65%, your employer would pay 7.65% if you were a W-2 worker. Just,
Wow.
just because you are a business owner, that still doesn't mean the IRS doesn't want that same amount of money. So 7.65% times two, meaning an employee portion and an employer portion, because you're self-employed, you're wearing those two hats. That's 15.3%, right?
Yes.
So guess who pays that 15.3% now? If
Who?
the business owner, if they have a
Really?
sole, yes, really, if they have a
Oh,
profit,
wow.
if they are a sole proprietor or a single member LLC and they have a profit, then that's their share. They have to pay both halves of the Social Security, FICA, and Medicare, Social Security and um,
See,
Medicare.
that's why I have you on, because I was an advocate for the LLC, and I said, you know what? Something doesn't sound right from a tax point of view. Like from a legal point of view, now this is only informational purposes. That's why I tell you, you listen to these shows, you take notes, and then you go to the tax professional and you go to the lawyer so you can have a very informative conversation with them so that and you can ask these questions. But that's good to know, because a lot of people are doing the LLC and they just think they are just going to be protected, that they're not going to have any problems. So I'm glad you are on here. So what about like a C corp? Because I've heard a lot of people are starting to really want to file the C corp.
Mhm.
It's like something, I don't know, someone was saying with the IRS, now you can correct me if I'm wrong, that it's something about taxes, or how much taxes you have to pay. I don't know
Yes.
if I'm saying it correctly.
No, you're saying it correctly. So here's the thing. The C corporation, some people want to go towards the C corporation because the tax rate is a flat tax of 21%
Oh, okay.
on your profits. But what people don't take under consideration is with the C corporation. So if you withdraw money as a business owner from the C corporation, and this is C corp,
Uh-huh.
this is S corp, same thing. If you as far as how you take money out, you can either borrow the money from your corporation, you can pay yourself a salary or wage on a W-2, or you can take, as far as a C corporation, you can take dividends, right? If you do that, the profit, whatever, you still get that flat, that 21%, that's what you're paying taxes on, right? But depending on how you take your money out, you're going to
Mm-hmm.
have additional taxes. If you
Wow.
withdraw the money, as a sole proprietor or a single member LLC, um, the business owner would do an owner's draw. So it doesn't matter if they
Okay.
do the owner's draw, because the owner's draw does not affect the profit. You still paying taxes on that owner's draw. With a C corporation, if you withdraw the money, there is no such thing as an owner's draw. You're going to draw that money out, either borrow it from the corporation, or you um, take it out in wages or salaries, and or you take it out as a dividend. So
Okay.
if you take it out as a dividend, guess what? You are taxed 15% on that dividend. So you're
Wow.
taxed on your profit 21%. Then whatever you withdraw, if you withdraw it as a dividend, you're taxed at 15%.
So let me get this correct with the, because I want to make sure I'm writing notes for people to write. So with the C corp, it has a flat tax rate of what, 21%?
21% as it stands right now. And that went into effect. This is 2022, so
Yeah.
2018. I think it was 2018 or 2019. I can't remember, but yeah, but that is as it stands right now. But a lot of other things come with that C corporation status. You have
Mm-hmm.
the minutes have they have to be on point. You don't
Oh,
have to
oh
have a meeting.
yes.
Yeah, you have to have a board, and it can be a board of family members or whatever. But there are instances where your board can take over your whole company and fire you.
Oh yeah, that remember the guy from Men's Warehouse, the owner,
Ah,
he's like he got fired.
oh wow.
From his they fired him, and a lot of people have been, and I was thinking it was one person. I was like I know Wendy Williams has
Mhm.
her show, and I know more than likely she's a corporation. And I was curious. I said, are they going to get rid of her if she doesn't come back? Are they going to
Mhm.
take over her company, her production company, if she doesn't come back? Are they going to make her step down? And that's another thing that people have to understand. Just because you start a business and you the CEO and you have board of directors, your board of directors can kick you out.
Right. And that is in a C corporation. Now, if you stay sole proprietor, single member LLC, that's not going to happen because
Yeah.
nobody can kick you out. But there's a difference there as far as the taxation. And that's another thing. Everybody doesn't have to be, it's all about the tax strategy. Everyone doesn't need to be a C corporation. Some people, based off of, they can be a single member LLC and their tax rate might be less than 21%. So
Mm-hmm.
it's all about strategizing. It's all about not waiting until the last minute, getting those books in order, and then have those conversations before April 15th. Because April
That's
15th
true.
is when you get the surprise. And then just to contrast that C corporation and we talked about the single member LLC. We talked about the C corporation. So the S corporation, that S corporation, you as a business owner, you got to go on payroll. You got to put yourself on payroll. Somebody got to,
Oh, so with the S corp, you are on payroll.
yes, you got to get that W-2. And then any profits after that, they flow into your personal tax return. Now,
Oh, wow.
your saving grace there is you don't have to pay that 15.3% tax, but now you have your profits from your business and you have your
Okay.
W-2. So you still have income tax from federal income tax, potential state income tax, and then whatever profits you have from the S corporation. So it just all depends on what type of business you have and
Mm-hmm.
your specific situation. Someone like we don't have any kids.
Mm-hmm.
So if I made 200,000 in my business, I may still be looking for some deductions. It might benefit me to have an S corp or a C corp. But if you have someone with two, three kids, they may benefit from staying a single member LLC because they have more deductions. You may have
Okay.
someone that itemizes more. You may have someone that says, okay, I want to become, I don't need to become an S corporation, but I want to do it because I want to be able to have an insurance plan, or I want to be able to have set up a retirement plan. And the best
Mm-hmm.
structure that's going to benefit me is to be that S corporation so that I can dump more money into a retirement plan. So it's a million and one things, and it's not a million and one, but there are a whole lot of things that you have to consider. You can't just say I'm going to be an LLC, because you could be an S corp and be an LLC. It doesn't matter. You can have a partnership and be an LLC, but it doesn't matter. It's all about looking at those numbers before tax season, before April 15th, and
Exactly.
getting the right plan for your business. Even you still have wiggle room if someone is an LLC, a single member LLC,
Uh-huh.
and they want to change over to an S corporation if they need to. There's still time to do that before
Uh-huh.
filing the tax return. But there
Okay.
again, you just got to have the right conversations, and you're right, with the right people. And the attorney is going to give you all the legal stuff. And then you get with an accountant and just throw everything out there, the good, the bad, and the ugly, and make sure and have that candid conversation so that you could get in the right business structure.
Somebody had a question. I don't know, on LinkedIn, how to file taxes on LLC without any activities. I'm not for sure what he meant. Let me see if he can clarify that.
Okay. And what I think, ask if they could correct me if I'm wrong. Um, it Maybe he's asking if he started an LLC, but he didn't have any income or expenses.
Oh,
Is
let,
that
let me find out.
okay?
With no expenses.
Or income.
Let's see if he'll respond. Because
Okay.
I think that's what he's saying. I think that's what he's saying. I think you're correct. And can you tell individuals, what does a tax professional, what do they want from us as your clients?
So in a perfect world, And there is no such thing as a perfect world. And I'm gonna just step back a little bit, because what I was going to say is a little different than what it is. There are some, it all depends on the accountant that you have. There are some accountants, they love the bookkeeping. They love getting into the weeds and straightening the books out. There are some that love the tax planning. They want you to come with your books already straightened out so that they can
Mhm.
get straight to the point. Okay.
Mhm.
There are some that they like that combo. They like the combination of both. They want to do the bookkeeping and they want to get you all tax planned out. So it's no right or wrong. Everyone's preference, it's different. But I can tell you what I think all of us as tax professionals like. We like if either um, our clients come to us either before the first filing deadline or before the extension deadline. So,
Oh, okay.
yeah, someone coming early January and saying, "Hey, I have a mess." And I have tons of clients like that, because I have a lot of clients that have real estate. And I tell them year after year, you can't bring me your empire. And they have empires, they have properties, oh my gosh, a lot of properties. you
Wow.
can't you can't bring me your empire on April 1st, because April 15th,
Yes.
we're not going to be done. If you filed an
Exactly.
extension, you can't bring me your empire October 1st, because 2 weeks is it's just not enough time. But if you bring me your empire the first week in January, we can have you all dolled up, all straightened out, at least within a month's time. If we have to do, because sometimes they bring everything. They bring
Mhm.
a big box. You know how like you've seen kids and they are going off to college and they have those big Rubbermaid big
Yes.
containers. Sometimes we get that. Sometimes we just get a nice little box, like they're moving out of town in one box. But
Wow.
whatever it is, the I think the consensus for all tax professionals is bring stuff early, because we have time to
Exactly.
auto correct. We have time to think about it. Hey, this looks like this may not be enough information because last year it was like this. Or, hey, have you thought about doing this before the deadline? Whatever the case may be, because I feel we all just want to help our clients and minimize the tax liability. So we want to have enough information in time. So that's what a tax professional, and I can't speak for everybody, but when I talk to my colleagues across the country, that's our main thing. If you get this stuff to us on time, sometimes we might be able to work a miracle for you.
Yeah.
But if you get it to us the last minute, we're still going to take it because we love you. We're going to make sure and take care of you. But we may not be able to take care of you in the way that we would want to if we had more time. I think that's mainly it. Because there again, like people bringing the big boxes, that doesn't scare any real accountant. That's what
Mhm.
we went to school for. So
Mhm.
that's not a big deal. It's just it's that time, because we know the more time that we have to analyze your information, that's the more time that we can get some things going for you.
Oh wow. And the question, I think you were right. The gentleman asked, "Do I have to file taxes for an LLC with no income?" So you were on point.
Yes, and the answer to that, you do, because the IRS, whether you had any income or expenses, when you get that federal ID number, the IRS tells you on that document, on that SS4 form, this is the tax form that you are to file, and this is the due date. And whether you made a dime or a million or nothing at all, they want a tax return. So you must file the tax return regardless. That's why I cringe when people say, "Oh, I started an LLC for my 2-year old because I'm building wealth." No, you're not. You just created yourself a tax return. You created yourself something where you have to file when with nothing there. And then if you decide not to file, then you could get some nasty grams from the IRS. Then you have to come to somebody like me to undo the mess
And it costs
because
money. It
it
costs money.
does. It costs money. So it costs you little to nothing to get into it, but it's going to cost you a good bit to get out of it because there's a process in order for you to get out of the LLC or filing that actual tax for tax return. So it's not just like, hey, I'm going to stop filing or I'm not going to file because I haven't made any money or I don't have any expenses. You have to
Yes.
properly get out of it unless the IRS is going to just hound you, and it's not worth it.
Yeah, it's really not. And can you explain to people what is going on this year with the IRS? Because the IRS did put out there that they have lack of employees like every other employer. And explain to people what to anticipate and expect in this pandemic of filing like this.
Absolutely. So one, you're spot on. The IRS is short staffed. They are short staffed like we all are, like you said, because of the pandemic, this great resignation. People are not working and people are resigning from the IRS. So you have the older generation that are resigning. So their talent pool is leaving, and then they cannot replace that talent pool fast enough. And a lot of them are still working from home. And I can tell you now, the quality of customer service lacks when they are at home because a lot of time, like with when they were not at home, all the calls were recorded. The calls aren't being recorded anymore, and if they are, they're not saying so. When I call, and I call the IRS a lot of times a week. So calls are not,
Wow.
yeah, calls are not being recorded. People are working from home. The people that you're getting are new people, so they may not be as versed in the laws as they should. Sometimes we, as the professionals, have to point them to where the laws are. So, what does that do? If you mail in something, whether you mailed in a payment or you mailed in a back tax return, the payments they're catching those payments. They're going to catch those with with some speed, but that payment may not automatically or immediately, I should say, apply to where it's supposed to go. So now
Yeah.
you're going to get a letter saying, hey, you owe this amount, and you're like, no, I don't, because I mailed in a payment. But the process, everything, anything manually done is being processed slower.
Yes.
Mailing a tax return, I had a client we that had some back tax issues, and we could not electronically file the tax return because of the window of time, and they waited. So we had to mail in the tax returns. We mailed them, I think it was February or March. November, we're getting a letter about the tax returns.
Wow.
November, yeah. And
Wow.
some of the offers and compromises that were submitted, we're still waiting on the decisions for offers and compromise. So there will be a delay, even with, we've heard, even with the refunds. The refunds will be delayed because they just, it's some of the refunds are automatic, but anything
Mhm.
that needs a set of manual or physical eyes, there's going to be a delay.
Mhm. Wow. So I guess people gotta realize that it's this tax season is totally different from any other tax season. And if you can If you make payments, try to do them electronically, because you'll get that email and that automatic receipt. And all you have to do is send it. If you can, try to file electronically, because
Mhm.
I think, to be honest, I think they will look at stuff more quicker and process it quicker when it's electronically done. And the gentleman said, "Thank you for answering his question." When
Awesome.
it's
Quite welcome. My pleasure.
Yeah, when it's electronically done. And I think that's very important. Do you have any parting words for our viewers when it comes to this tax season?
I think you have just kind of summed it up. File as early as you can. Get your books in order, business owners, as early as you can, because your tax professional will thank you for it, and you'll thank them because they can better assist you. They can help you out more if you do that. And even if you're filing, let's say you're going to file your return on your own, get a professional just to lay eyes on it. I have a few people that come to me and they're like, look, I'm going to do this myself, but I'm going to pay you just to look at it for me, or I'm going to pay you to help me just make sure I'm doing everything right. Lovely. That is fine. Just for as long as you get it done, get it right. Yeah, just do it early enough, just like you said, electronically. And yes, because it's, even if the IRS has to lay eyes on it, the computer has done a lot of the work for them. So it's easier for them to go behind a computer and lay eyes on something versus having to
Mhm.
start from scratch laying eyes on something.
And plus, if a lot of IRS employees are working from home, they can get everything electronically. Whereas if it's at the IRS building, they got to go get it and bring it back. So that's a delay. Forget the snail mail, do the email. That's what I call saying. It used to
Exactly.
be a time where the mail, because sometimes our mail, we won't get our mail. I remember I got something from the IRS, and it was supposed to have been sent to me in January. I didn't get it till March, and they were saying you have a deadline. I'm like, let me call Deltrease, because it was like, I
Yes.
just got this, and I
Hmm.
called them and I said, I just got this. You sent it, well. I said, I just got this, so I don't know how to deal with this, and it takes a lot. And you're right. Some of them are professional, and some of them are new, and they don't know what they're doing.
Hmm.
And the sad thing is, I hate to say it, like with a lot of employees, they are just hiring anybody now, because it's like employees, it's like, I'm done, I'm quitting. And so a lot of employers, I hate to say it, are desperate, so they'll take people that qualifications are close, and then they have to train these individuals. But because of the pandemic, everybody is still working from home. People are not working in their offices. So you're right. It's a difference when you work from home and when you're at work. Your morale is different. Your mentality is different. Because
Yeah,
when you're home, you're more lax. When you're at work, you got to be on your P and Qs, because you don't know if your boss, your manager, your supervisor may come in and pop in.
yeah, and it's the characteristics of a person, because some people thrive working at home, but some
Hmm.
people do not. And you're right. And especially with a new person, that may not be the person that you want to work at home, because they need to
Hmm.
be able to knock on a door and say, "Hey, I have some
I have
questions."
questions. Exactly. Exactly. Me, I can work in any environment. I work good at home, and I work good in a workplace. Like being a teacher, I'm glad we're back in the classroom, because it was hard virtually, because you had to call the parents at work, they working from home, and the kids are playing around and not ready. And
Mhm.
so it was better to be in a classroom. But when it comes to my business, I find it better to be home, because I'm nocturnal, so I can get a lot done at night,
Gotcha.
and it's more peaceful. But Deltrease, I want to thank you so much for
That's
being here. And I'm glad. I was like, I know we're going to get this. I
I
know we're
thank you for your diligence. Yeah, because it was a struggle.
Yeah. And also, I want to thank you for always being a guest.
My
And I would
pleasure.
love to have you on again, because a lot of people have been asking me, because from January, we started January on Clubhouse until about April, we're going to be talking about business finances, because a lot of people are concerned about it. And I would love to have you on again. Maybe we can do more of a Q&A where they can ask you questions. So just let me know your schedule, because I would really just love to have you on again, so that people can. I think people may feel relieved, like that young man asked the question, he got it answered. And I think people will feel relieved to talk to a tax professional, especially the news. They just, they're media crazy and they get you all nervous. Oh my God, they're going to be late. They're not going to give me tax return. But if they hear from a tax professional who knows the tax laws, it, like, you ease my mind with a lot of things that you discuss. Now I have a clear understanding from a financial perspective of what business entity would be the best business entity right now. So thank you so much. And tell us how people can get in contact with you.
Oh, absolutely. And I don't know. Well, can I share a link on here? I can't. Um,
I think, can you put it in the comments? I think you can comment.
let's see.
It should be.
Uh no, I can do private chat, but
All
I
right.
can't do comment.
Okay. Well, what
Um,
I'll do is I'll cut and paste it
okay,
so they can. I got it. I got you. You
okay,
know I
awesome.
got you, girl.
Thank you. So, just what you were talking about, there are a lot of business owners that they just need um, some conversations. And what I'm offering this tax season for small business owners, just a limited amount. So, if it's something that your audience is interested in, we're doing this. We're running it for 2 weeks, and just to feel it out, because we don't want to be overwhelmed, because we want to spend time with each person. But we're doing some VIP tax services this year. So VIP tax season from now until April 15th, we have that VIP package is just unlimited questions via chat, a one-on-one video chat with me personally, the emailing of the questions, or a web portal it is for unlimited questions about your tax return with me and my team. The one-on-one is with me exclusively, and then we have our first come first serve basis of what we call Ask Me Anything Mondays, where you can jump on a call and get some private time with me on a first come first serve basis. So that is our offering, because we have a lot of people that have heard a lot of different things out in these streets that are not true.
Yeah.
So we want to provide some quality information, if you will, to
Yeah.
our small business owners. So that is what we're doing for people right now.
Oh, okay. That's good. So I'm glad, and I'll make sure I put that in the LinkedIn as well, so that they can get there. I'll put your information in LinkedIn, because it doesn't allow me to directly go to LinkedIn. I have to have my phone to go to LinkedIn, but I put it with my Facebook, Facebook group and YouTube, so it'll be there. But I want to thank you so much for being here, and make sure you watch the replay, everybody, because this was some great information. And Deltrease will be back, because from February until April the 15th, we're going to be, the ultimate business conversation is going to be really focusing on your business finances, because there's a lot of stuff going on and we need to be ready. So Deltrease, I want to thank you so much
My pleasure.
for being here with me. And can you stay on for a few? I'm just
Yes.
going to shut us down. And
Okay.
thank you so much for tuning into the Ultimate Business Conversation. This was my first one in a long time, and we had a few hiccups, but it was a success. And we will be back tomorrow with our guest, Leroy Allen. And also, we'll be on Clubhouse too, talking about tax the tax season. We're doing it on Clubhouse as well, and that is the Bankrupt Proof Your Biz Clubhouse. So thank you for tuning in, and everyone have a beautiful evening. Enjoy the rest of your week and enjoy your weekend.